Today, my guest is Ross Stryker. Ross is based in Lebanon, Missouri. He's also the operator of Smart Asset Opportunities. He's a retired, successful orthodontist, and he's also now an entrepreneur and real estate investor. And we're going to talk with him a little bit about how his view of retirement and his plan that he was on was basically set up to fail, and what he did to correct course. But before we do that, I want to remind you that if you like the show, please let us know. We would love to hear from you. You can like, share, and subscribe. Leave a review. We would love to hear from you, our listeners. Also want to remind you that if you'd like to see how handsome our guests are, be sure to check out our YouTube channel. That's Commercial Real Estate Pro Network. With that, I'd like to welcome my guests. Ross, welcome to CREPN Radio.
Darren, thank you, and thank you for throwing out the handsome part on watching the video. My mom says I have a face made for radio, so that's great. I'm glad you included that. But I'm glad to be with you. I've been listening to your podcast, and I enjoy it, and I know you're helping a lot of people, and hopefully your interview with me will help a lot of people too.
Well, I'm looking forward to doing that or getting into it. And just wanted to point out, we identified before we started recording, we have traveled some similar paths. You're based in Lebanon, Missouri there, and I, before moving to Oregon, lived in Osage Beach, right there at Lake of the Ozarks, and we also found out we were both K-State alumni, so can't remember what's the Go K-State or every man a Wildcat, or whatever that.
We're Wildcats, yeah. My
Yeah.
wife's a Wildcat too, and we both went to college there. And so, as I mentioned to you, I didn't meet her there, but met her while I was in dental school. And so, serendipity has played a big role in why I ended up here in Lebanon, Missouri. But it's a great place, and had a great orthodontic practice, and enjoyed that for many years. And my wife helped me with that, and now I'm doing something different, and hopefully helping people in a different way. We try to create smiles. Hopefully, we're creating smiles in a different way for helping people to get to their freedom point. So I know we'll dive into that a little deeper. So.
No, and that's kind of an excellent transition there. A little bit about your background. So let's talk a little bit, I guess, just to kind of set the stage. What was going on in your career, your work path that, I guess, what was going on, and when was it that you realized something was different, or what needed to change?
Okay, so just a quick background. When I graduated from dental school, I went into the military. I was on active duty for 12 years, and my last duty station took me to Fort Leonard Wood, Missouri, which we asked for. Most people don't ask for Fort Lost in the Woods, as the military calls it. But my father-in-law lived nearby in Clinton, Missouri, and we wanted to be near him. And it turned out that that time the military was having cutbacks, and we said this would be a good time to jump out of the military and into private practice before I get too old to start something, because that's a big venture, and giving away a military retirement after 12 years active duty, which we did. So we set up practiced here successfully for 23 years, had 3 locations, great practice, had a great income, and I had convinced myself that I just loved straightening teeth so much that I was just going to do it until I died at the chair. But really the truth is, Darren, that once I found out there was a different path, and as we talked about before we recorded this, I kind of feel like the movie Matrix. I feel like I went to a mentoring group just by accident, sort of, in Dallas, and it was a great group, and it's almost like I took the red pill and discovered all this stuff that was going on that I had no idea. I think most busy professionals, small business owners that know nothing about real estate investing don't even know how to get started. They wouldn't even know where to start. They would think that real estate investing involves your drinking buddy going out and buying a house, and you're out there on the weekends, pounding nails and managing it yourself. That's not real estate investing to me. I found out there's a whole different world going on. When I did, I found out, hey, you know what? I've really pretty close to my freedom point, as I describe it, where your passive income replaces your active income. And suddenly I discovered I didn't really love my profession that much. I was ready to make a change, but with a change comes, well, do you retire and just go to the beach and use a metal detector looking for coins, or do you have something active? And I don't really believe in the notion of retirement. I don't think the Bible talks about retirement. I think we're meant to serve others, and so I wanted to find some other way to serve others, similar to the groups I've bbeen involved with, the way they're serving others. They're trying to help other people reach that freedom point.
Oh, that's awesome. You mentioned the occurrence or the occasion in Dallas where you took the red pill, if you will. Prior to that point, what was your view of retirement? How had you seen it? What was your plan, other than you said continue to work?
Yeah, the view at that point. And look, I'm not criticizing people that are on Wall Street and selling those products. They have a job to do. They're really convinced that their product is the right way to go. But the notion would be that once you get to a certain age, you're going to have to be more conservative with your investments. You can't ride the Wall Street roller coaster forever. You have to have something that's set and guaranteed. So, what are the traditional wisdom? You're going to put it in something more secure, if you can call it that, like municipal bonds, make 3 or 4%. Maybe take 4% of your net worth out each year. All the traditional things that we hear. Well, for most small business owners, including myself, that's not going to replace your active income at 3 or 4% return, especially when you factor in interim taxation, inflation costs, and so on. It's just not going to work. But once you start finding out there's returns that are available pretty passively, 8, 10%, if you want to get more active, you can do better than that, of course. Then you start going, you know what? That makes a whole world of difference. The difference between a 3 or 4% and an 8 and 10% is huge. And for us, it was just like the light bulbs went off. My wife and I are looking at each other at this first meeting going, we got this solved. Now it's just a matter of we've got to practice. We've got to sell it. We can't leave all these patients that are embraced as an Invisalign, holding the bag. We've got to find somebody to take our place. And that took a little time. But once we got that settled, then we were off to the races, starting this new venture, trying to help other people.
So let's talk a little bit about what was involved as far as the different types of passive investments and opportunities that you saw that caught your attention.
Okay, so the group that we first started with, and I'll mention by name, they're still in existence. I don't belong to them anymore. They're called Freedom Founders. Actually, I'm going back as an invited alumni to kind of tell people my path since I left the group. But it was a great place to start because the leader of that group, David Phelps, brought in people that he knows, likes, and trusts to take people that are not knowledgeable of real estate investing, kind of take them by the hand. So it's all basically turnkey stuff. It was lending opportunities. There were wholesalers, flippers, people that had syndications, people that had funds, note funds, so on. You could invest in those. Or you could take titled properties, and it was all the typical things that people get started with real estate investing. I'm not doing them anymore, but single-family homes, duplexes, fourplexes, so non-commercial products, if you will. And so it was all hooking up with people that were finding the opportunities, investing with them, maybe buying a property that's coming off an auction or an REO type thing, and you're rehabbing it, you're paying for that, and then you're getting the cash flow at the back end. So all very simple stuff. Great place to start, very secure place to start. But it just, after a while, you're just like, I can't scale this. I can't help other people. I can't take one doctor at a time and help them buy a house. It just doesn't work. But when you get into multifamily or assisted living or commercial office buildings or storage, those are scalable things that you can help a number of people, and that's what we're doing now.
Got it. And just to make sure I understood right, was this 5 years ago when you went to that meeting about then?
Yeah,
okay.
It was in 2014. Yeah.
Okay.
So, and it's really weird because I'm a pilot, and it was in Dallas, and the day that we woke up to go to it, there was a front between us and Dallas, and we were kind of like, should we go? I don't know about this whole thing anyway. This real estate investing thing probably didn't work. And I said, you know what? Let's take off and see if we can find a hole, get through there, and we did. And boy, just one of those things that just luck just plays a role sometimes. Yes, hard work, but sometimes, like I said earlier, serendipity leads you to certain things that just work out, and that group was fantastic for us. We belonged to that group for 3 years, and now I belong to other mentoring groups that are doing more things like syndications and commercial investing. So,
got it. So you came to that realization that there was a scaling challenge in the model that was presented. I mean, it was a good model, but it had some restrictions, or not restrictions, but some capability challenges as far as growing it.
It's a perfect model for most people. It just wasn't for me. And what I mean by that is, if somebody does want to be quote unquote retired, they don't want to be active in some nature, then those investments are perfect. Now, it does take a little bit of bandwidth to replace the active income of a dentist who might be making a couple $100,000 a year, because that's a lot of single-family homes to replace that kind of income level. But still, it's doable, and for most people, that works perfectly. But for me, wanting to do something further to give back, it just didn't work for me. I mean, I know it works for some people, but for me, it was not something that I was going to be able to help other people. So needed to find something more in the commercial line.
So what was the commercial line venture that you found?
Well, that took a while because once we decided to make that change, we looked at a lot. First of all, we helped raise capital for other people's syndications, and we don't need to go into all the details of how that worked. But as we did that, we looked at these asset classes and we said, we really at some point are going to need to find a place where we take the lead. We looked at assisted living. We looked at multifamily. We looked at commercial office buildings. What we're bringing to the table now as far as opportunities are a couple of things. First of all, we're bringing other people's opportunities to our tribe, as I call it. I have a weekly blog. People that get invited to webinars, and we put on webinars that are educational only. If they wish to participate in investment, they have to contact the general partners later to get an offering memorandum and a PPM and all that. But we're actually putting self-storage deals together for folks. So that's the niche that we found. All of them are great. I mean, I didn't mention mobile home parks. Another great niche that people can do. But at some point, you have to drill down and you can't know everything about everything. You have to drill down and find one asset class that you can become very knowledgeable about. And we've spent the last year plus just focusing on self-storage, even belonging to a self-storage mentoring group. People probably didn't know there was such a thing, but there are. And so there are groups that just focus on self-storage, and we meet quarterly. We have monthly calls. We've got folks that are on our team from that group that help us vet deals and help us put together all the SEC, for the PPM and all that. So we've got a team. It's not about me. Frankly, if it was about me, we wouldn't get anything done. It's about creating a team of people around me.
Right. No, so you've honed in. It sounds like you kind of went through most of the asset classes there as far as commercial real estate, office. I don't know if you looked at retail at all, but you mentioned assisted living, multifamily, mobile home, and self-storage. What was it that really attracted you about the self-storage over the others?
I tell you, it was a tough call. First of all, I'm going to point out the one disadvantage of self-storage. The disadvantage of self-storage is it's a want, not a need. We all need a roof over our head. So multifamily and mobile home parks have an advantage. So it's a want, but it seems to be a big want in this country. And the other thing I liked about it was I saw the major players focusing on the large metro areas. So we decided to drill down even deeper and look only in the central part of the country because I wanted to stay away from the coast. Cap rates, not great. You know that. You live on the West Coast. And plus proximity to get to places and vet them. And then the other thing is we wanted to look at more what I'll call secondary and tertiary markets where some of the big money is staying away from, at least has been, but they're starting to enter into those. So I'm talking about markets like Kansas City, Birmingham, Alabama, those kind of cities, and even down even further. We'll even look at a city or a town if you want to that's maybe around 50,000 or more. So it will stay in that market of under several 100,000 to down to 50,000. That's kind of our defined area that we're looking at.
Got it. You mentioned you've looked through all these different. You've found a particular class you like. The market size you've kind of talked about. You mentioned the disadvantage is that it's a want as opposed to a need. I don't know that I heard we lost your signal just for a brief moment there. Some of the upside, what are the positive characteristics that you see in that?
Okay, well, the positive thing is we're a society that buys a lot of stuff, and we don't have room for our stuff. Okay, and so if you look at in good times, people are buying a lot of stuff. And they need a place to put them. Or they're buying boats and RVs, and they've got homeowners associations that don't allow them to park those boats and RVs in their area where they live. Now, let's look at the other side of this. Let's talk about when things aren't so good. Let's talk about people moving from a large home to a smaller home. They're downsizing, or maybe they're moving into an apartment because they need to downsize. Well, they don't want to give away their stuff. Okay, they like their stuff. They're not going to give it away, and they'd rather store it. Or you've got millennials that are entering the situation where they are more experiential. They're not really buying as homes at the rate that maybe previous generations have, but they still have things like snowboards and other things that they want to store, and they need a place to store them. Look at the other end of the aging factor. Grandma's moving into an assisted living. Well, nobody wants to give away grandma's stuff, okay? So where are they going to put it? They're going to put it in storage. So there's just all kinds of reasons in good times and bad times where storage has weathered things. And I know it kind of goes back and forth, but over the last 20 plus years, storage and mobile home parks have been right up there as far as the best returns in good times and bad. So again, no guarantees. There's always risk with any investment, and we want to make sure we cover that with people too, to make sure they know that there's all kinds of different storage too, Darren. There's buying existing storage with cash flow. There's developing new storage, or there's conversion projects. You mentioned retail. I'm not real fond of retail, but I'm fond of retail places that go out of business like Toys R Us and Kmart because they make good conversion projects for storage. So,
yeah, no, I've actually recently I've become kind of more of aware of that situation, the conversion, and to me it makes sense from a standpoint of these huge retail buildings that it never made sense to me just to come in and knock them down to redevelop the land, because I was like, wait a minute, there's value in that structure. You just got to learn how to, or figure it out how to make it make money. So on that the spectrum of opportunity in storage, have you guys participated in any new construction or conversion, or can you speak to?
Yeah.
Okay.
We've got 2 conversion projects I'm part of right now. One in Mableton, Georgia, outside of Atlanta, and another one across the river from Missouri in Wood River, Illinois. Those are both conversion projects. The one in Mableton is warehouses that are being converted. The one in Wood River, Illinois is a former car dealership. We have a new development going in Birmingham, Alabama. That's a ground-up development. One thing about storage, too, converting those buildings is, what is the key for cities? They don't get sales tax from self-storage, so they're a little reluctant to give entitlement or zoning for storage. But once you can get that entitlement, it's like gold, because it's the not in my backyard syndrome. People don't want a mobile home park in their backyard, and they don't want a self-storage facility in their backyard. But once you can work through with local civic leaders to get that entitlement, then you're off to the races, and you've got something that really means a lot. Our project in Birmingham, the city directly across the street from me, because we're on the border of 2 cities, they put a moratorium on storage. Well, good for me, because I'm right next to their city, and I like that they have a moratorium. Yeah. Good for them. They shouldn't allow any more next door to me. So.
Lower that bar, raise the bar.
Yeah. Raise the bar to entry from now on. Once I get in, raise the bar. Yes.
Yeah. No, that's great. So did I hear you right? There's no property tax, or is it based on the
valuation?
Sales tax. Or sales tax.
Okay. Sales tax. If I said property tax, I misspoke. There certainly is property tax, and that's one thing when you're doing your underwriting on these deals. And many of these existing facilities have a property tax that's going to be bumped up, sometimes doubled, on the sale price, depending upon how that state evaluates things. So some have an automatic thing based on the sale price. It may not kick in for a year or two, but certainly in the underwriting, and when you see a pro forma from a broker, it's one of the red flags. They're quoting you the existing property tax rate, and you're just like, that is not going to work. So one thing I would tell your listeners is, never believe a pro forma that a broker gives you. You've got to underwrite it the way you would operate it, not the way it's being currently operated. That's a big difference.
No, that's so true. I think that's one of the if the brokers weren't brokers, they could be good fiction authors or whatever. Sometimes and I get it from a standpoint of when you're talking with a seller, you've got to appeal to the seller's ego or what they're hoping to get, kind of thing, in order to get the listing. If you don't get the listing, then you don't have anything to sell. But there is
Right.
some sort of a due diligence that the buyer has to be aware, and do your due diligence and make sure your numbers are representative of what you're going to experience. Are you guys operating these, or do you lease them, or how's that
Now
going?
we have third party management. That's another part of the underwriting that you need to do is who is going to be operating this day to day. Darren, I'm not going to be opening a gate to a storage facility. Okay, I'm not going to be behind the desk when you come in. Sorry to disappoint any of your listeners. I know you said I have a handsome face earlier, but I'm not going to be there to rent them the storage facility. As a matter of fact, in some cases there's not going to be any humans involved. It's all going to be done with kiosk or online renting of spaces. We can talk about that more, but more and more reducing personnel costs, which with any business is one of the largest parts of running that business. But yeah, the key to investors is who is going to be running this. What are they looking at? Are they looking at my great knowledge of self-storage? I already told you I've only been doing this for a year, being involved in it. I wouldn't want me managing it. You want somebody that knows how to push those marketing buttons, how to get butts in the seat, if you will, how to get people into those storage units. And these are the experts, and they charge for it, but they're worth it. There's 6% management fee, and then whoever they're going to have working there, their salary and costs, if we have that. So yes, always going to be a team that we create anywhere we go is who's going to, and a huge part, any asset class. I mean, we could go into this for a week. Property management is the one killer that I've had in about any asset class. If you don't have proper property management, you're going to get killed.
Yep. Amen to that. All right. So you've gotten into these, you're playing the spectrum from new construction to conversion. Have you bought some existing properties as well? I mean, that are currently being operated as multifamily?
I'm not currently part of one that was an existing one. I do have contracts on existing ones that we're doing our due diligence on, but haven't taken down an existing property. So I guess I must have an aversion to existing cash flow or something. Which I don't. My wife tells me my next acquisition needs to be an existing facility with cash, because we've got conversion projects going in ground up development. There's some delay in gratification there. So
right. No, the operating cash flow up front would be nice. All right. So now that you've made this transition from an orthodontist, you've moved into real estate, you've graduated from the single family into something more scalable. And just to make sure I understand, are you operating as the principal in these, the general partner, or are you?
Yeah.
Okay.
Yeah.
Okay.
Yeah. We're and I should have said that, we're looking specifically at opportunities that are large enough for me to bring other people in to invest in the project. So typically, if you want to look at an existing facility, it would have to probably be 300 units or more. Probably 500 or 600 would be better. Or square footage wise, if it's a conversion project, it would probably need to be 70 or 80,000 square feet, because by the time you get the net rentable square feet, you lose about 30% of the facility size to hallways and so on. So we're looking at a certain size. If I could put it in terms of dollar costs, we're probably looking at things that are somewhere in the $3 to $7 million range. I say that because if we get too big, we're playing against the REITs, the big boys, and if we're too small, it's just not scalable to bring in investor capital to. It just doesn't work for third-party management. Again, third-party management's the key to these things, and they just don't want to manage things that are too small. So we've got to have a certain size to them.
Oh, that's great. I wanted to just kind of circle back, because I think that one of the things that kind of resonated with me was you mentioned something about how many people don't understand kind of the I don't know whether it be the Wall Street or just how to get into real estate. How to, because you mentioned that most people, if they think about it, they think of the guy that, or the one person they know that has a rental they're working on weekends, and that just doesn't appeal to them. And I'm just kind of curious if you have any kind of words of wisdom, because I was just literally talking to a fellow that I know, and he works with real estate builders and has never thought to invest with them. And I'm just going like, he views it all as a Wall Street model, like he's trying to get his model there. And one of the things I've come to recognize is the there's this flip of the switch when you have your asset in your 401k or whatever on Wall Street. In order to get your money back, you're going to have to start liquidating those stocks or whatever, the assets to get the money, right? In order to get your return. Is there anything in that spectrum of that resonates with you that you see when you talk with people about where they are and where they want to be and kind of the disconnect?
Well, yeah, first of all, let's just even talk about the whole idea of investing in real estate. It's called an alternative investment. Now, why would Wall Street call it that? Because it sounds scary. An alternative investment, oh my God, I don't want to invest in something that's an alternative. I want to stay with the mainstream. So right there, the definition of it scares people. I know that people hear about the real estate market. Well, let's talk about what happened back in 2007, 2008, 2009. There isn't a real estate market. There's submarkets. And okay, Vegas and California and Florida or wherever the places that took the biggest hits. But there were lots of cities like Kansas City and Birmingham that barely was a blip on the radar screen as far as what happened there. So real estate investing is safe if you, well, look, we all know about seminars that people go to about flipping houses. I'm not criticizing anybody, but it's kind of the run to the back of the room thing where only the first 5 people that get to the back of the room and put down $5,000 will tell you the real secrets. This was just a teaser seminar, but if you want to really know, that's not the place to start. The place to start is with a mentoring group like we got involved with, and there's plenty of them out there. They're safe, okay? And go to a meeting and find you could even go to a local RIA meeting, but I find that a lot of those end up just being a lot of people that aren't really doing anything. Okay, they're just coming to a monthly meeting and talking about things. They're not really doing anything. But I would suggest that you find a mentoring group. Sometimes there's a little cost to that in terms of time away from work and family. But that's a really safe place if you find the right group. Now, I'm sorry, I got a little distracted here with where I was going. But what was the rest of the question, Darren? Sorry.
Well, no, you mentioned about the, or I guess where I was going with is just this recognizing it, and you did touch on it about the alternative investment, how it's been labeled. It's this kind of a scary thing. And I think then from there you kind of took it and said, look, you need to get educated. Essentially, is really kind of the sum
you need
of
to
that,
you need to get educated, but eventually you need to take action because that's where you really learn. I mean, how many people have you probably talked to that have read 50 books and they've listened to a bunch of podcasts and they say, well, what should I do next? And you're like, well, you might want to actually buy something because, maybe you'll learn a little bit more by actually being involved in a transaction.
Yeah, no. Live bullets are definitely there's a lot more lessons to be learned there than what you would read.
That's a good way to put it. A good way to put it, yeah.
And I think that's I think that's true for anything. I think there's only so much you can learn in a book or a seminar or a podcast or a conversation. It's when you actually get in it and you face these things that you've heard about that your understanding becomes crystallized, and
right.
So you're able to more accurately understand. Let me ask you this. As an insurance broker, I've tried to talk with my guests about risk, and as an insurance broker, we're constantly talking about risk management, and we talk about how to. There's a couple different strategies. You can avoid risk, you can minimize risk, or you can transfer the risk, which is what insurance is, essentially transferring the risk. In your experience here and what you're seeing, what do you see as the biggest risk that people face?
Well, first of all, there are many risks, but if I had to boil it down, look, if something has gone wrong, let's say it that way, because not everything goes 100% the way you want it to. This is there's no guarantees in investing in real estate, but it almost always comes back to people. We touched on property management earlier. That's certainly a key part of it. So I would feel like if you want to avoid that risk, you've got to be involved with a group, a tribe, as I call it, because there's protection in a tribe. Let's say that somebody brings an opportunity to that group, and not any malfeasance, but it just turns out they're in over their head. They don't know what they're doing, and they lose somebody's money. How many times do you think you're going to be able to come to that tribe again with something that's going to work? Never. that they're done. Okay, so there's a little bit of protection there. I would also suggest that don't start with anything that's too big. I like the idea that we started with single family homes, although I'm not doing that anymore because it's not fatal. If you have a single family home that doesn't go well, for most investors, and I deal mostly with accredited investors, so I know I'm dealing with a little different pool of people, and that's maybe, but that's not going to hurt them that much. And they're still going to learn a lot from that. So I would say don't jump in too deep into the pool, and I would say make sure you're playing with the right people. Those are keys for me. But there's other things, but those are pretty big takeaways for me.
No, I totally the people mention I think is so true, especially in this real estate investing, which I firmly believe it's a team sport. I've tried to do it all myself, and I've made some mistakes that I was embarrassed about. But as you share them, you find out others have done the same thing, and then you realize that like the commonality is we're all trying to do it ourselves. Like you mentioned, if you have somebody to share it with there.
And I will tell you, that's a hard thing for people like myself, and I had to get used to being the dumbest person in the room sometimes. And that's hard for people to put their ego on hold and say, I've got to create a team like we've created for a project in Birmingham. You've got to have architects and contractors and property management folks and people that are involved on your team that know way more than I know about self-storage because they've been doing it for years. That's fine. My role is to put people who want to invest in self-storage together with those people and make the combination work for them so they can get their freedom point. That's really my role. My role is not to be the smartest person. It's just to be the person that connects regular people that are trying to find their way to their freedom point with the smart people.
I love it. Ross, where can the listeners go if they'd like to learn more or connect with you?
Darren, really the best way is our website. It's smartassetopportunities.com. And yes, if you drop the E and the T off that asset, it would be a smart ass, which I'm a little bit of a smart aleck, which didn't get into that on this, but that's kind of where the name came from. So, but smartassetopportunities.com. And if they go there, I would suggest they try our weekly blog for a few weeks and just see if they like what they're hearing, kind of kick the tires a little bit, if you will. And if they decide they want to know more, my contact information, cell phone numbers on there, if they can get that and reach out to me directly if they wish to. But, the unique thing about us is we care about people, but we don't care if they invest with us. If they wish to, great. And if they don't wish to, that's fine too. And the other thing is we're actually, the projects that we bring to our tribe, I'm putting my personal money into it. It's not like it's just something I'm getting other people's money and putting it to work. I'm putting my own money in there. And I think that's always a key thing too, that you need to ask a promoter, are you investing in this project? I always like to ask that. So we do. I'm not bringing something to my group that I'm not going to personally invest in.
No, I love it. That's I find that has always been kind of a curiosity of mine, and I understand there's some reasons sometimes where it makes sense for the person not to, for possibly guaranteeing a loan or whatever the case may be, but I think there's always kind of that level of comfort when somebody is participating in it as opposed to just the salesperson kind of thing. So
right,
I love it.
Yeah.
Well, Ross, I've enjoyed this. Enjoyed getting to meet a fellow K-Stater and Midwesterner, and learned a lot about what you've been through and your investment strategy, and love what you're doing, and appreciate you sharing. And I hope we can do it again.
Yeah, Darren, that was great. I'm glad we have a little commonality in our background. That was fascinating to hear that. But yeah, it was a real pleasure, and I appreciate you having me on. I love the work you're doing. Continue to do that, helping people get to their freedom point too. All
right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.